we're going to talk about how to find financing for your real estate deals. My name is Evelyn Sophie. I'm a licensed realtor, an investor, and a coach. How do you finance your real estate deals? The 4 C's in real estate. What does that mean? You can finance your real estate with cash, with conventional loan, with creative financing, or a combination of all of them or two of them. Those are the 4 C's in real estate. Now let's talk about each of them. Cash. Yes, you can buy your real estate cash. However, that's not the best way of buying your real estate. Yes, you can buy cash, but how many real estate can you buy cash? And you're not going to be able to grow fast if you start buying cash. So the best strategy will be a combination. Now, the next way of buying real estate is creative financing. What is creative financing? Just like the name implies, creative financing means using creative ways to finance your deals. Like seller's financing, where the seller is going to act like your bank. You don't need a bank. The seller will finance your deal. The second, creative financing, like subject to, there are so many different creative ways you can finance your real estate deals. I have a course on getting started in real estate mastery accelerator. I'll put the link on that course on this video. You can go to my website, growwealtheasy.com, and sign up for that course. I also do one-on-one coaching on how to get started in investing in real estate. So we've talked about cash and creative financing. The third way to finance your real estate is conventional loans. If you've bought a house before, there's a high chance you use conventional loans. There's so many different types of conventional loans, but these are loans that you actually apply for through a bank. They'll check your credit score, they're going to check your ability to pay, they'll ask you a lot of questions, you go through underwriting, and then they'll qualify you. Now, this is the obvious way on how most people buy real estate. However, it's so hard to scale your real estate business just through conventional loans. Yeah, you can buy a few conventional loans, but as you start scaling, I would say start looking at other creative ways to acquire properties. Conventional loans will require you to put down 3.5%, 5%, 10%, and maybe 20%. One of the conventional loans that is very popular in the real estate investment world is the DSCR loan. Debt Service Coverage Ratio loan, that's a DSCR. That's the most common loan that a lot of investors use. You can get a 30-year fixed mortgage. It's very flexible, and you don't need a paycheck to get qualified with using this loan. Now we have other creative combination. The last way of acquiring real estate is through creative combination. Now, what does that mean? Creative combination means you can pay part with cash, and then you can do seller's financing on the other part of your loan. Or maybe you can buy it with a conventional loan and seller's financing on another part. For example, let's say you find a house that needs a rehab. You could do a hard money loan, which is a form of creative financing. You can do hard money loan for the down payment, for the cost of the rehab and the financing the property. However, you can get the down payment, which will be like a 20%, from other creative ways. Maybe the seller can give you the 20%, or you can do private money loans. Those are the major loans categories in financing your real estate investment. In my course, Real Estate Mastery Accelerator, you're going to go into depth of how to implement these loans and different banks that you can actually easily get these loans from. Thank you again for watching. Subscribe.